Anubhuti Sahay, who's head South Asia Economics Research at Standard Chartered Bank, joins in with her assessment of how the growth positioning would look like. Anubhuti, great to have you in the show. Good morning. Thanks very much for taking out the time. What's your own reading as far as the growth trend goes?
So for the upcoming GDP data, we do expect a moderation as the statistical base effect fades away. We will see GDP slowing down all the way from 8.2% to 7.5%. If you're looking focused more on GVA, we are likely to see GVA slowing to 7.3% from 8%. And as Poonam was mentioning just before, there was a very strong base effect at play in Q1. There was some probably lagged impact of pent-up demand. And as those two one-offs fade away, some moderation is inevitable, whether you talk about Q2 or for that matter, the remainder of FY19. In our view, bulk of the slowdown is likely to be visible in the industrial growth. It grew at almost 10.3% in Q1, but given the base effect, even if you look at say the corporate earnings, which grew at almost 27% in Q1 and now has in Q2 has come down to single digits, we think there will be a significant slowdown in the industrial sector. Even if you look at the construction, that also likely is expected to drag the growth in industrial sector. Agri, once again, a slower momentum. I would say it's more back to normal levels rather than very strong growth, which we saw in Q1 of close to 5%. Thankfully, government likely spent a lot in the second quarter. That should provide support, and even if you look at it from the credit side, there was some improvement in credit. So services is likely to be the savior, to say so, for the Q2 GDP growth numbers, keeping it supported at around 7.5%. But net 8.2% in our view was aberration, and we are likely to see some normalization going forward. And of course, with this whole story around NBFCs, there are concerns about global growth. Probably we can see one quarter where there is a dip in GDP growth below 7%, but that would again be temporary. We should see this year as well as next year growth staying very much, or say firmly, above 7%.
Okay, but do you see a slowdown coming in demand, and do you see a slow rural demand because of the sharp spike up in inflation, which now may be normalizing, but at least was there in the previous quarter?
So, inflation, if you look at inflation has actually surprised us on the downside, and especially if you focus on food inflation, the momentum has not picked up, and that's the most important reason why you would see downward revisions in inflation expectations for this year. So I don't think it's driven by inflation. Rural demand has picked up, but not as robustly as it was expected in the beginning of the year. But of course, it's almost like a mixed story. You have certain segments which are doing very well, and especially they see a good improvement in rural demand, so that if you look at FMCG, or for that matter consumer non-durables within IIP, that has been doing pretty well. But if you focus on two-wheelers or tractor sales, there is some moderation. Now our view is that going forward, rural demand is likely to remain supportive, but not as strong as was expected initially. The impact of MSP price hikes, which was expected in when the announcement came in, has not yet filtered in. So that's likely to keep some demand contained to a certain extent, but election-related expenditures can be a source of support. If you look at currency in circulation, that has shot up massively, and our sense is that going forward ahead of national elections, we'll see the currency in circulation staying pretty strong, and that should support rural consumption. Urban consumption has been pretty much steady. So overall, if I have to just sum it up, consumption in our view will remain the main driver of growth over the remainder of FY19. as well as most of FY20. Investment demand remains supported only by government expenditure, and any noticeable improvement in private investment will only happen once the national elections are behind us.
What is your assessment, Anubhuti, when it comes to the rural demand trend? I know Aisha has asked you on that specifically, but the thing with rural demand is we keep hearing it's picking up. We keep hearing that there's, as the per capita income rises, things will only look up. A favorable monsoon will only help, and you've elaborated on that quite extensively. But what are the few specific top 2 or 3 signs that can give us a sense that there's enduring rural demand revival that we can see that can sustain the next leg of growth, which a lot of consumer-oriented businesses are banking on? Where do you see the signs of that within the economy?
So, if you're looking at rural demand, there is a little bit of a distortion, to say so. For instance, if you're focusing on certain indicators to assess the buoyancy or robustness of rural demand, in general, we focus on tractor sales, two-wheeler sales, and consumer non-durables, and at times certain white goods. Unfortunately, most of these data points, especially if you're looking at the current set of data on these indicators, they show a massive slump. And there is, again, a statistical factor at play. Along with it, there have been few regulatory changes in the auto space and related to insurance. So that's also weighing down on the performance of these indicators. So probably the usual metric which we have used to assess rural demand is distorted. So I would focus more on what the corporates are talking about, and how they see rural demand panning out going forward. And if you focus on, say, the commentary which has come from, say, the FMCG segment, it remains, they did see an uptick in rural demand, and at the same time, they think that it is likely to stay strong. There is a bit of cautiousness, no doubt about it. But we don't see any pessimism around rural demand going forward. And as I mentioned, if we take the election-related spending into account, and especially when you focus on an indicator like, say, currency in circulation, I think if you put these 2-3 things together, it will give us a better assessment on how rural demand is panning out.
Okay, Anubhuti, thanks very much for joining us with your understanding of the state of the economy and how you see the growth for the economy, your projections really panning out from here.